All right, so Jesse from Oklahoma writes in, when is the best time to do Roth conversions? So he said he read my book on Roth, on the tax bond retirement account. He says we plan on retiring in the fourth quarter of 2023, in which case he'll be in his mid 50s, as will his better half. We will take a lump sum distribution of her pension, which will be around $200,000, and she will have $400,000 still in a traditional 401k. And he'll have $230,000 in a Roth 401k, so that's fantastic, with zero planned income for 2024. What's the best approach to begin converting for her lump sum and her traditional 401k, as well as the employer contribution to his 401k, to his Roth 401k? In your book, you say taxes on $100,000 would be about $86.55. Does that include state tax? All right, so look, man, if all the money you have for income is $100,000, then you take out 24.4, I think now for standard deduction. That puts you about 73,000, something like that for AGI or your taxable income. Your taxable income. So you're looking at about $8,600. But aren't you gonna have income for other things too? I mean, you got to think about that, man. So if you have, I don't know, $50,000 of income to live on. I mean, you got to have money to pay the bills. This is why I like having a cash account, actually, because if you have a cash account, essentially that's tax free because it just sits there in cash. You just pull the money out to put food on the table, and then you can start doing Roth conversions. I hope that makes sense. So essentially, what's going on here? We'll say Jesse needs $50,000 to get by. All right, he lives on $50,000, and he has $100,000 in bank accounts and CDs and whatnot. All right, so that $100,000 is not taxed. When he pulls the money out, it's not taxed because the only tax he had to pay was any interest he received, which is minimal. So now if he does $100,000 Roth conversions, that's literally his total income will be that $100,000 of Roth conversions. Take out your standard deduction, and you're paying about $8,000 to $9,000 in taxes. That does not include your state tax because I don't know what your state tax is for the different 50 states. You'd have to throw that in there as well. So let's just say it's $2,000 in state tax. You're looking at roughly $10,000 in taxes to get $100,000 out of your traditional into a Roth. That's cheap money if you ask me. But again, you still got to come up with the $50,000 in which to live on. And this is why I say the last few years of your retirement, you should really be building in a cash account so you can live off that for the first couple of years before you take Social Security, Medicare. For your Roth 401k, you roll that over to a Roth IRA, easy peasy. And your lump sum pension, hers is $200,000, and it still leaves $400,000. Yeah, I mean that seems pretty easy to me, man. I'd say, all right, at the end of the day, you convert $100,000. It depends on what income you have. If you need $50,000 to come from a pre-tax account, now your AGI will be $150,000. The $100,000 you're going to convert plus the $50,000 you need to live on. That changes things, man. That changes. So you'd be 130, I guess 125 or so as taxable income. It's going to put you a big amount in the 22% bracket. So in that case, you're probably paying $15,000 to $18,000 of taxes. In my opinion, it's still worth it. All right, hope this helps. Thanks, man.